For more on the markets, we're joined now by Barometer Capital's head of trading, Diana Avigdor. Good to see you, Diana.
Hello, thank you very much.
So, Diana, as we get an hour away from closing the books on the quarter, it's going to be one that we're not going to be sad to put behind us. Of course, now we're worried about what happens next month, in the next quarter of trading. What do you see for these markets?
Oh, that's for sure. These markets have been historic, both on the downside and the upside. We're up something like 20% from our lows. Look, we think that we're in a process of setting up one of the great opportunities in our investing lives, and it will take perhaps weeks and months, but process here is key. And we at Barometer want to keep our powder dry and be systematic. The way we look at things is that this market is not going to be coming back in a V-shaped scenario, but rather more of a U. But what we will see at the next weakness is what holds up and where the investment opportunities are. So there will be more weakness and more market work to be done. I don't believe right now that we will see new lows, but I do think that the market will retest somewhat. And like I said, at that point, we want to see what holds up relatively well and what does not. An economic rebound will be there, but the extent and speed with which it will come back, it will be faster, I think, than other recessions, as this was not an economic event, but a health event. Some habits will change forever, like, say, the fluidity of work or the desire to commit to long-term financial commitments. But there will be sectors and companies that will come out of this maybe even in a better situation.
Yeah, when I think about trying to navigate these markets, and of course at the center of this, you said it's not a financial crisis, it's a health crisis, and also this experiment on a grand global level to see if governments can shut down an economy, provide enough funding to the people to get through that patch, and then start the economy up again. I mean, I can't think of another scenario like this as investors when we're trying to see, we hope they can pull it off.
You are absolutely right. And the key and why this is not going to be a V recovery is everybody wants to see, and the views on this are very wide, how long the economic rebound will take. And also, there undoubtedly going to be some level of psyche impact from a collective perspective. Like I said, for example, how easy or difficult it has been for companies to move to a work-from-home environment, or the development of online shopping. You know, before all this happened, online shopping was about 11% of the total wallet. Sure, there is some things that you don't buy online, maybe your groceries, maybe that'll change, maybe your furniture, maybe that will change. But certainly, we will go up from this 11%, maybe even to 25%, if not more. So there will be some things that will stay. And to your point, unprecedented stimulus thrown at markets, fiscal and monetary, everybody is backstopping this. How long will it to come back, and what will maybe change and perhaps not come back?
When we talk about that central bank action and unprecedented moves there as well, we know that for all the moves that the U.S. Federal Reserve made in the financial crisis, when it tried to, trim the balance sheet, when it tried to get rates back to something even approaching normal, long before we had this healthcare crisis, the markets did not like it at all. We're setting up a very strange world for ourselves years out from now in terms of the kind of balance sheet central banks are holding, the kind of debt that governments went into to try to get us through this.
I think you're absolutely right, but at this point, there are so many priorities to deal with, such as getting out of the situation, and how long will that take? For sure, there's going to be a lot of twists and turns in the economy and in the way the world looks after this before we get to the point where we'll be able to perhaps pull back. But I will mention one thing. This week, last Friday actually, the market sold off in the last hour and a half quite substantially. when news hit the tape that the Fed was not going to buy $75 billion a month, but $60 billion a month worth of bonds. On Monday, market just regained everything that it lost on Friday, somewhat on the feeling that perhaps that is not a bad thing, that perhaps they didn't need to buy $75 billion. There was some conversation about how their bid was not fully covered, and that was explained as a slight positive that perhaps that much money was not needed. So until we get to that point, and you're right, the world is very used to this. Liquidity has been for a while, even before this, and now even more. There will be some twists and turns, but I feel that we will be more focused on seeing what comes back and in what way. Look at the Chinese market, and you mentioned that we're looking to them, for example. Their economies has opened up a bit. People have started going back to work, and their stock market has held in. So again, I don't think that we've seen the highs or the lows. I think we've seen the lows, but I do think that we will try and retest again. And then as the development continues on the COVID, the news and the healthcare issues taken care of, and the drug companies that are coming up with solutions, market will eventually work its way up, and we'll see what holds up relatively well.